The US inflation slackened to 8.3% instead of 8.1%, and we have already discussed this issue in our previous reviews. Traders are bitterly disappointed by such a result. Against this backdrop, whispers about a 100 basis point hike spread across the market. As a result, the euro needed just a moment to tumble below the parity level with the US dollar. The decline in both the euro and the pound sterling was so considerable that traders are still ignoring fresh macroeconomic data. Meanwhile, the UK inflation slowed down to 9.9% from 10.1%, whereas analysts had expected a surge to 10.6%. Thus, the Bank of England has found a reason to slacken the interest rate hike, and this in turn should have led to a further drop in the British pound. However, the euro and the pound sterling showed a rebound. Now, traders are mainly focused on the future auctions of the Federal Reserve. However, until next Wednesday, when the FOMC meeting will take place, the regulator is unlikely to make any announcements. The Fed's representatives are even prohibited from commenting on the recent inflation figures. In other words, traders may rely only on macroeconomic reports and the way various analysts explain them. Today, the US is going to disclose its producer price index data. The indicator's growth is expected to slacken to 8.9% from 9.8%. If the predictions come true, US inflation may also slow down, and in this case, the euro may climb above the parity level. However, if the producer price index declines less than anticipated, panic will again sweep over the market, thus boosting the greenback. Yesterday, the euro-dollar pair slumped by more than 200 pips. As a result, the quote dropped below the parity level. During the Asian trade, the pair rebounded to the parity level. However, at the beginning of the European session, it resumed falling. It means that traders are ignoring the euro's oversold signals. Thus, the inertial movement is still in force, and this may lead to a further decrease in the euro. In other words, the downtrend will continue if the price settles below 0.9950. In this case, the pair may hit a new low, and the upward movement will become possible if the price consolidates above the parity level. In the event of this, the pair may rise towards 1.0050 and 1.0120. Meanwhile, the pound-dollar pair also dropped by over 220 pips. The US dollar has almost recouped all the losses after the recent correction. Although short orders on the pound sterling are overheated, the bearish sentiment is still intact, and that's why the pair may still tumble to 1.1410, the local low recorded in 2020. To change the market situation, the price should settle below 1.14 on a daily period, and in this case, traders will receive a signal that the downtrend will continue. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.